Thank yourself for clicking on this video. If you clicked on this video, you're most likely wondering what other confluences can you add to your trading. And I'm going to make this an exciting video. It's going to be raw and unedited, so make sure you stick through the entire thing. It won't be that long. And if you do stick through the entire thing, I will also give you a bunch of bonus tips throughout the video that will also help aside from the actual confluences. So get your popcorn, get your little snack, and just sit through this 10 to 15 minute video while I break down these concepts that I use to take trades every single day. And not just me, but my entire team as well. So I have made over 5 figures day trading so far at 18 and 19 years old. And let me show you the confluences that I started trading a couple months ago that have gotten me an increased win rate and is how I plan to actually scale my accounts that I currently have. So before I begin, I actually put the link to our free Discord if you want to see a complete analysis, breakdowns every single day, and a free course that we have to offer that our team recorded, pretty much a couple hours worth of content for you. And if you want to see that, this is what the actual Discord looks like. We have a completely free Discord. I put the link in the description of this video, so click that right now and join up. And then just type in the general chat when you join up, tag me, and then we'll start chopping it up, okay? So this is pretty much in the free Discord what you can access. We post daily analysis every single day, trade breakdowns every single day. We have the free course right here for pretty much the basics if you're still starting in trading. And we also have free guides that we personally made in-house as well to get you started with everything you need. So go ahead and join up, link in the description. And enough yapping with that. Let's go ahead and break down into these things that I love. So confluences I love, as you can see right here. When I'm taking a trade, these are the main things I want to see. Now, I'm not going to break down my entire day trading strategy in this video, but I pretty much am at the same time, so make sure you stick along. So basically, let's get right into it. Whenever I'm taking a trade, obviously, before I'm even looking at any of this, I'm looking at the higher time frame in general as a whole as to see where price is going. First thing I want to see is I go to the 4 hour. We're going to use this trade from the other day as an example. Let's go to the 4 hour. This trade was beautiful, by the way. If we go down to the 4 hour, I don't know, hopefully this doesn't blur up everything. Also, make sure you like this video if you're hyped to make some bread trading, because this should help y'all out a bit. Nothing is financial advice, but you know what I mean. All right. So when we go to the 4 hour, we want to identify our first confluence. We want to identify a higher time frame fair value gap. Now, what is a higher time frame fair value gap for me? A higher time frame fair value gap is either a 4 hour, a 1 hour, or a 15 minute, okay? 4 hour, 1 hour, 15 minute. Okay, that's the things I want to see. So start off on the 4 hour. We want to identify, by the way, I'm talking about the New York market open. Typically, I see the best moves within every single 4 hour open. So go to the 4 hour candle, see when your morning session when opens. For me, I'm in New York time. I trade the New York stock market open, which is at 9:30. And I typically place my trades around 10 a.m. when that 4 hour candle opens. It opens from 10 a.m. to 2 p.m. And then at 2 p.m. another 4 hour candle opens, okay? So the first thing I want to look at is where is the 4 hour most likely going to draw back into before pushing back up, okay? Or pushing back down. Where are we headed to in the 4 hour? So if we look here on this chart, we can see that the 4 hour, we're talking about this day right here. The 4 hour, what is it doing? We are making higher highs and higher lows, higher highs, higher lows. So we are literally making bullish structure. Keep it super simple. KISS. Keep it super. I don't know what it stands for. I'm not going to lie. Keep it simple, stupid. That's what it stands for. Okay. I don't pay for TradingView because I use NinjaTrader, bro. Judge me in the comments. I'm using this so I can draw out prettier stuff for you guys. So higher high, higher low, higher high, higher low. Where are we going on the 4 hour? We are most likely going to go higher, especially because we have a higher time frame fair value gap right here. So let me draw that out for you. So a higher time frame fair value gap right here is the space, the imbalance created by this middle candle with the previous candle and the next candle. What do you call that? I don't know. So draw it out from here to here. Draw it out all the way. There you go. As we can see, the 4 hour fills that gap completely and respects it. If we were to close below it, then that would be a bearish sign, especially if we break structure to the downside. But we didn't. We filled the imbalance, and now we're ready to push up. We actually got the previous candle, the 4 hour candle, to close above the gap, which is super bullish. Now, drop down to the 1 hour time frame, right? Because I mentioned we want to see all the gaps here. So now we drop down to the 1 hour time frame. We already have a 4 hour gap. Now let's see, do we have a 1 hour gap? So the 1 hour, we do have a 1 hour gap. Now, the only thing about this 1 hour gap is it does get ran through. As we can see right here, 1 hour gap gets ran through to the downside, but we can still use it to play off of an entry, okay? We can still use it for an entry. So we've now unlocked our higher time frame fair value gap. What do we want to see next? Next thing we want to see is possible SMT. Now, if you don't know what SMT is, I'm going to draw it out real quick for you. I'm not going to pull it up for this example, but I'm going to show you what a good SMT looks like. So basically, I'm going to draw it out with the brush. So let's say, and if you already know what SMT is, you don't have, just give me a minute, all right? Chill out. So SMT, between two correlated assets, we want to see a divergence in price action, typically in the way price develops structure. So for example, if we are developing structure to the upside on ES like this, boom, boom, I'll make it super quick, boom, boom. Then we got this one, boom, boom. All right, we got that. Now, on the next leg, let's say this is ES, right? If this is ES, we are expecting price to take out this high, right? So I'm going to show you guys bearish SMT. So bearish divergence in price. This is going to be between NQ and ES. So bearish divergence would be when ES takes this out, okay? ES takes this out, this last high. So I'll mark it out right here. Boom. This high gets taken out by ES. But what ends up happening on NQ, NQ does not take out the high, and NQ actually starts forming a lower high right here, and we can start breaking structure to the downside. What is this telling me? This is a bearish sign. So when there's a divergence at highs, that's a bearish confluence. When there's divergence at lows, that's a bullish confluence. Now, you can check for this on the higher time frames and things like that, but you don't need this for every trade. Like, I don't take this for every trade I take. It is a bonus if I do get it because it's just extra confirmation, but you don't need it. That's just one of the extra confluences that I love. Again, this is what this video is about. Now, the third thing, I love, my drawing is beautiful. I know. Comment if you like the drawing. Drop a like and follow and subscribe. But yeah. Also, we in the free Discord, we literally post every single trade we take, break it down into each confluence that we were looking for, and then each one that we didn't get or things that we didn't like about the trade, we give the trade a rating and then just break down exactly why we took the trade with a screenshot as well, so you can actually look at the stuff and then the result of each trade. Okay, so hit the link in the description if you want to join the free Discord. We have so much sauce in there for you, and just chop it up with us. We're chill. Next thing, inverse fair value gap. So what is this? So obviously we know a fair value gap. We have a fair value gap, right? This is actually what ends up happening with this gap right here. So after we tap into the higher time frame fair value gap, since it is an hourly fair value gap, I'm going to drop down into the 5-minute time frame, and I want to see for confirmation mainly on the 5-minute time frame for the last step. But first, I'll start off in the smaller time frame. So here we're on the 5, right? We're on the 5 right here. But I'm looking for an inverse fair value gap. So this can come in, I believe this one came in on like the 1 minute or the 3 minute. Let's double check here where it is. Have it right here. Yeah, so it was on the 3. Yeah, on the 3. Okay, so as you can see, let me make this bigger for you guys. On the 3 minute, boom, boom, boom. Let me draw it out. We have this bearish fair value gap. Y'all can see it right here, okay? Boom, draw it out from this wick to this wick. Okay, now we have a fair value gap. Now, when I draw it out, I want to see price close above it, creating an inverse fair value gap. Let me color this one like purple or something so we can distinguish it. And I'm going to close this out right here. Okay, so we have this inverse fair value gap. This is an IFBG. All right, this is just a bullish sign. This is a sign that we're starting to flip narrative back to the upside on the lower time frames. If you see this on the higher time frames, again, this is a whatever time frame you're on, it matches. Okay, so here we failed to get it. I'm not entering here yet. No, this is not. But Inverse fair value gap is a confluence I definitely want to see when I take a trade. And the next one I'm about to show you as well. So first, I wait for the inverse fair value gap. And as you can see, once we get this candle closure up here, we get that inverse fair value gap. Now, since we're on the hourly, I mainly want to see a 5-minute change in the state of delivery, which is what I'm about to show you. So we already got the fair value gap on the 3. Next thing I want to see is a change in the state of delivery. Again, all of these confluences are confirmation. I'm waiting for confirmation that price is ready to go into my direction that I'm trading the market in, okay? Waiting for confirmation is key when taking big trades like this, unless you're scalping, whatever. You can wait for confirmations at any time frame, even if you're scalping. I don't know how scalpers do it, but this is how I do it. So what are we doing here? We tap into, I'm going to break it down real quick. First step, we identify the higher time frame fair value gap. Second step, we wait for price to retrace back into it. As you can see here, we're in it. Second step, we obviously want to go long, so we want to get a bullish inversion. We do on the 3-minute. We close above this gap on the 3-minute. Fourth step, we want to get a change in the state of delivery on the 5-minute, since this is an hourly gap that we're delivering off of. So 5-minute change in the state, what does that mean? Go to the last leg that was created down. The last leg that was created to the downside was created by this body right here. You find the body that created the last leg down. The lowest point was right here, and it came from the top of this candle right here. So once we get a candle closure above the body of this candle, that is a change in the state of delivery. Because now, before we were delivering from here, so the current state was a bearish state of delivery. Once we close above the delivery that happened here, we are now in a bullish state of delivery, right? So now we're delivering bullishly. We have completely taken this high right here. Not really a break of structure, because a break of structure, some people see it as the wicks, whatever. I just like to use change in the state of delivery because it keeps it super simple, especially if we get a strong close like this. So once we get this strong close like this, I'm ready to enter the position, but I'm not entering in on the close because I don't want to get cooked on my RR. Most likely thing to happen when we get a push up like this is we get a retracement back down, which is exactly what happened. So as you can see, go ahead and set my long position where we change state. So wait for this candle to close. It closes. Now I'm setting my entry right here. Set my stops at these last swing lows. And now, as you can see, we have tons of highs to target down up here. So right here, we have a high to target. Boom. Right? So I want to target those. So what do we get there when we target those highs? As you can see, more than a 2R pretty much. So even if you put it down here, you get a 2R targeting these highs right here. And that's pretty much the entry model. Again, let me zoom out so y'all can see all the steps. Confluences I love. We got the higher time frame fair value gap. We got the SMT. We got the inverse fair value gap. We got the change in state of delivery / break of structure. These are mainly the things I look for when entering a trade. And again, this is just to confirm that we are ready to go back up. Because if I'm entering down here when we're in the bearish fair value gap, in the bullish fair value gap, I don't know what the hell's going on. I'm waiting for confirmation, right? I'm waiting for the time to align, right? So we have 10 a.m. 10 a.m. is a key place for price to retrace and then come back up. Why? Because the 4-hour candle prints at 10 a.m. And what do we know about candle anatomy? Candle anatomy, every candle pretty much can form, every candle can form wicks, and then it will form a body, right? So what do we know about candles? Typically, if we know a candle is most likely headed to these highs, that means it's going to be an up close candle. That means it's going to be an open, low, high, close, right? Open, low, high, close. So what does this mean? We open, make a low, and then we're going to close high. So what am I looking for? We're looking for that wick. We want to get that manipulation down so we don't get stopped out. So wait for the manipulation, and then we enter in at the birth of the distribution of the move. Okay, that's pretty much it. I broke down, this is pretty much my entry model. Again, join the free Discord in the link in the description if you want to chop it up with us. We also have a 7-day free trial that you can watch us trade live every single morning for free and talk to us if you actually want to watch us trade live for free and access everything else we have to offer. Again, join the free Discord, link in bio. Comment if you guys have any questions and I'll be responding to the comments. And make sure you subscribe to help me out and get this to more people so we simplify and help other people out as well. But other than that, this is what I'm going to use to scale my trading this year. And I'm pretty proud of the way I've gotten to understand the markets and simplified it for myself to really just wait for confirmation for moves and then take a trade that has a higher probability of actually making profits. So other than that, I'll see y'all in the next video, wrapping it up just at 15 minutes. Peace.